So very good morning, friends. So hope all of you are ready. So we are going for the revision of our marginal costing topic. It is actually in your management accounting. It is called decision making. It is called what? Decision making. See, first of all, let me tell you in the introduction itself. See, please don't restrict your studies into what is your group one knowledge. In your group one knowledge, you learn only base. That will have a lesser small weightage only. When it comes to your group 2, you are learning lot of concepts on make or buy, replacement. You are going to discuss decision on shutdown decision, key factor decision. You are discussing different other concepts also. So you have to balance all those areas. You should not restrict into what? Only the formula based question you have learned in your group 1. But however, formula based knowledge also required. Formula based questions also testing for your exams. Moving into the next level, we have in this chapter, if you take the trend of MTP or the previous year question for New Zealand, only in your intermediate, this paper alone, there are 14 mark question also coming. That 14 mark question is coming from none other than marginal costing chapters only. So let me tell you what role you should be able to recall this in this chapter. So what is our objective of this session is we are recalling all the concept very fast. We are recalling all the concept very fast. Then we are doing standard questions in each areas. We are going to do standard questions. Standard questions is exam purpose, either previous year question or MTP model questions only will practice. Are you ready, friends? So with your permission, we'll start, friends. First of all, let me tell you, formula based you are very familiar, so I'm not taking much time for that. I'm telling very fast. It is, you know, normally our sales is equal to variable cost plus fixed cost plus profit, but in our marginal costing scenario we go with variable cost plus contribution. Because of that, we can say sales minus variable cost is equal to contribution, otherwise contribution is equal to what? F plus P. So first one, there is a new concept called what? Contribution. So you want to know what is the contribution on the perspective of sales. There is, we have a ratio called what? PV ratio. You know different methods for computing the PV ratio. I'm not rating each method. I'm just revising it very fast. First one, sales minus variable cost by sales into 100. F plus P by sales into 100. We have one more formula, that is your PV ratio is equal to F plus P by sales into 100. Then we have sales minus variable cost by sales into 100. Then we have change in profit by change in sales into 100. Then we have another very interesting point. A lot of friends will forget. That is, if you know your variable cost ratio is 60%, they will give you variable cost ratio. So you have to understand your PV ratio will be what? 40%, because balancing. This will now affect in your leverage chapter of your FM also. This concept is helpful for leverage chapter of your FM also. Are you clear, friends? Now from this 4-5 formula, you have to reverse calculation from this formula. This formula you can be able to get what is the formula for what? Fixed cost. What is the formula for profit? What is the formula for sales? The sales we generally call desired sales. Lot of reverse calculation comes from this point. What is the formula for fixed cost in this formula? What is the sales into PV ratio minus profit? In profit also same way, sales into PV ratio minus fixed cost. What is the formula for desired sales? This we are doing in rupees. What is the formula in desired rupees? F plus P by F plus P by PV ratio. The same thing you can able to do in units. Desired sales in units. So this chapter having a specialty. Different route you do, you will get the correct answer only. So what is the answer you will get it, friends? That is the point will be what? Same F plus P. You will get what? Contribution per unit. Are you clear? Same F plus P, you have to divide by what? Contribution per unit. Now moving into the next level. Moving into the next level, we have discussed an interesting area called break-even sales. First, you should understand the relationship. Very important. Your sales is equal to break-even sales plus margin of safety, because your margin of safety plus break even only total sales another. So you can get break even sales, one formula called break even sales is equal to total sales minus margin of safety. These are one shortcut. Apart from that, normal formula you can take break even sales, break even point, all are very equal. Break even sales, break even point, all are same meaning only, which you have to divide fixed cost by PV ratio. If you go with in units, if you go with units, fixed cost by contribution per unit. The same point will go for what? Margin of safety. What's the difference between break even sales and margin of safety? Two mark also relevant. Break even sales is the level at which your total sales is equal to total cost. That is no profit, no loss. That is total sales is equal to total cost. Whereas in marginal safety, you will start generating profit. You will start generating profit. Sales above break-even sales only we call margin of safety. So margin of safety we can say your total sales minus break-even sales. So as I discussed, margin of safety indicate the profitability. Margin of safety indicate the profitability. So how can you do the margin of safety? Same point, profit by PV ratio, or if you want in units, profit by contribution. Are you clear? So this is one the different way you can able to find out the margin of safety. This is all you learned in your intermediate group 1 itself. Now coming into group 2, we were started discussing break even point when there is a two or more products. Break even point when there is a two or more products. Can you able to recall this? These are all very interesting. Can you able to recall this break even point? Here are all 2 point is there. Case 1 and case 2. Proportion is given or proportion is not given. If proportion is given, so that is why your whole equation you should be able to recall. And that is why in the class also I am requesting always keep the equation separately always. So it will be easy for you to record. So proportion is given. Your overall break-even point is equal to your overall fixed cost by weighted average contribution per unit. Then you have to convert into each product. Each product is nothing but that is product A if you want. What is your overall break-even point? What is your overall break-even point? Into that ratio you have to just correct. If you want to convert into rupees, you have to multiply the selling price. So if you want to get product A, that is how the ratio will be 2:3. If it is a 2:3, you have to put it as 2 by 5. If it is a 2:3, you have to put it as what? 2 by 5. Are you clear, my dear friends? This is how you have to go for the point. Now suppose if it is proportion is not given. Proportion is not given. Then overall break-even point will be what? What is your overall fixed cost by what? That is simply average contribution per unit. You have to take what? Average contribution. This can even come for 2 mark also. This can even come for what? 2 mark. This can come for a reverse calculation also. This can come as a reverse calculation also. Hope you are clear. This is another. Then we can do same thing based on PV ratio. We can do on the basis of what? PV ratio. When you do on the basis of PV ratio, what you have to do? Overall fixed cost by overall PV ratio. What you take? Overall PV ratio. What is overall PV ratio? Overall PV ratio is nothing but what is your total contribution from all. That is overall contribution divided by overall sales in 100. We need problem on this. Here, so this is the different way you can find out what break-even sales. So different reverse way you can able to. When and all, this is another very important. When and all PV ratio changes, your PV. This is very interesting. See, some friends what will happen? They'll give year 2011 data. They'll ask you the answer for 12. You can't take 11 if PV ratio is 20%. That doesn't mean that next year also you get the same 20%. So PV ratio will change us you to understand. PV ratio, the main formula is sales minus variable cost. Balance everything reverse also. So PV ratio changes if selling price or variable cost changes. This is very important. You can also write if you not written already. PV because reverse calculation standard question and all, this is required. PV ratio changes if selling price or variable cost changes. If your selling price or variable cost changes, your PV ratio changes. So that you should be very clear. You should not depend, because students sometimes mistake what they will do now. Same PV ratio they will take. They will take what? Same PV ratio. That you should not take. Are you clear? After this, you have learned a concept called a shutdown point. After this, you have discussed a point called shutdown point. What is a shutdown point? It is a level of sales level to close down your business. To close down your business. We discussed the two ways. First one we did formula based day. Another one is analyzing the profit. First one it is formula based day. Another one is what? Analysis in the profit. What is in the analysis in the profit? If A, B, C, three division are there, what is the profit? If C is closed down, A, B, what is the profit? If profit is increasing, close down. Profit is decreasing, do not close down. Apart from that, we can do shutdown point by a formula basis. Shutdown point by a formula basis. If you want shutdown point in units, you want shutdown point by in units, you have to go for avoidable fixed cost by contribution per unit. If you want in rupees, avoidable fixed cost by you have to go for what? PV ratio. Then the question, this will be easy for recall those friends who kept all the formula in one page. Some friends who kept formula in different area, they have to keep on searching this. You have to recall it, everything. You should understand in one chapter what it is there. So what is this avoidable fixed cost? Avoidable fixed cost means what? What is your existing fixed cost minus unavoidable fixed cost minus unavoidable fixed cost plus additional fixed cost due to shutdown. Additional fixed cost due to shutdown. This is how we have to make. Are you clear, friends? So this is how you have to go for what? Avoidable fixed cost. Are you clear? So this is also another concept. After this, we taken a very good weightage, very good discussion on a separate area called a key factor analysis. We are done with a key factor. Key factor can be material, labor, machine hour, or raw material cost, or it can be land also. We did problem on what? Land. If anything, if a key factor, your steps will be what? Step one will be you have to do contribution per key factor. You have to do what? Contribution per key factor. So the first we have three statements. We have three statements. The statement number one we call statement of ranking. We have a statement called what? Statement of ranking. What is statement of ranking? You want to do A, B, C. Sales less variable cost. You have to find out the contribution. Then you have to take the key factor and contribution per key factor. Higher the ranking, better the option. Higher the ranking, better the option. So once you did the statement of ranking, then you have to go for what? Statement of that is statement of allocation. We have to go for what? Statement of allocation. What is statement of allocation? What is your total available? So this role you have to prepare a separate format, separate formula, very easy for you to revise before the exam day. So total available. You have to go for what? First allocate to rank 1. So what is the demand of rank 1? Fully given. If you have 10,000 here, you have 10,000 here, you will allocate full demand. So let's say 4,000. If it is any balance, that only will be given for what? If it is any balance, that only will be given for what? Rank 2. That will be given for what? Rank 2. Now, if it is again balanced, that will be given for what? Rank 3, rank 4. This is the normal method. Then or we did later on we did an advanced question in allocation. Very important. You have to understand. Question will tell you minimum criteria. We did some land question. They tell that minimum of 1,000 acres has to be done for potato. 1,200 is to 4 like that they'll give you. If they give minimum, then the criteria is different. You should not go for ranking base. You have to do first what? Allocate the minimum. So that is why you should be able to recall all the questions. Your entire discussion, we may discuss 8 and 10 days, everything we are recall. So you should be able to recall. Then only your revision will go very easy. Allocate minimum. So in the allocate minimum, what you do now, you have 3 products. So use the rank 1, use minimum. you have to go for it. Then who is the rank 2? His minimum you have to go for it. Let's say 3 products. Rank C, his minimum you have to give. Now you give 200, you give 4,000, you give 1,000. Now you given all the minimum, my dear friends. After giving all the minimum, still you have some balance. This balance will be given for rank 1. How interesting. Sometimes very, very advanced, subject to his maximum. Suppose his rank 1, we can allocate only maximum 4,000. 3,000 we have available, 4,000 only will you balance 1,000 will go rank standard. So first one, it is a normal question, group 1 level question or a normal case. There is no testing, no constraint. That is rank 1 first, rank 2, rank 3. When it comes to next level advancement point, what you have to do, my dear friends? You have to go for first minimum first. First you have to go for what? Minimum. Then you have to minimum. After the minimum, then you have to go for what? What is the balance that you have to go for what? Next, additional one advanced point we have did. That is, you have some land. Some land is only for particular product. Some land is only for what particular product. In such a case, you have to prepare two statement and two rank. Two statement and two ranking. That is two ranking and two segment of allocation. First ranking for first constraint, second ranking for same step point. But you have to make a clear or not. So these are all the different tests we should be able to understand in what key factor analysis or product mix. Key factor analysis or product mix. After this, main point is what you have to go for decision making question. In decision making question, we have lot of area we discussed the export decision. We have discussed what export decision. Then we have discussed what they will ask you what subcontract. Then we have what make or buy. We have make or buy. Then you have to go for what accept the order or not. Accept a special order. Accept the special order. How we will do all these points? See, if anything you do, mostly you will go make or buy differently. But apart from make or buy, majority of things you have to prepare what statement of profitability. You have to go for what? Statement. Majority of case. 99%. After the formula, majority of case, you have to prepare what? Statement of profitability. What is statement of profitability? Case 1, case 2. How many case you have? You have to do. Now you have to understand what? Case 1 maybe you are running at 80%. Case 2, you may be running at 100. Case 3 may be 120. Like that, different case, different units. Now what you do, our profitability statement only, what is the sales, what is the less variable cost. You know, variable cost will vary according to the production. Sometimes they'll tell next year the price will increase. That and all you have to get. Efficiency increase, cost decrease, like that, you have to be very clear. Next, you have to go for what? Contribution. Next, you have to go for what? Contribution. Then you will reduce what? Fixed cost. What is will make fixed cost? See, fixed cost, other thing remain same. Your capacity changes, fixed cost will remain same. It will not change. But they will tell you some adjustment. If you want to increase from 100 to 120, you have to buy a new machinery. That cost is 10 lakh. Useful life is 5 years. So you have to understand depreciation. Like that, you have to approach it. Clear or not? So this is how you have to go for what? Statement of profitability. So lot of suppose from 80 you want to make 100%, you have to make an additional advertisement expense. You have to make a additional advertisement expense. So what you do for that? You have to incur a cost. For that, you have to incur a cost. That is also you have to be very clear. Clear or not? Now, once you reduce it, you will get the answer called what? Profit. Which option you are getting higher profit? That will be the best. Which option you are getting the higher profit? That will be the best. This is how you have to take. So, lot of scenario we have to do profitability statement. Profitability statement clear cut. You have to understand which are all the variable, which are all the fixed, and accordingly you have to present it properly. The relationship you have to understand one level to another level. What is the cost increase, cost decrease? If anywhere is mistake, then entire option will get error. It is not a formula based question. How it is make or buy? Make or buy very interesting. It's very small point only. You have to identify what is your cost of make, what is your cost of buy. You have to compute what is your cost of make, what is your cost of buy. If your cost of make is less than cost of buy, you will make it. If your cost of buy is less than cost of make, you will buy it. This is all will come in a raw material perspective. Your raw material either you can buy from outside or you can make in-house. Raw material you can make in-house or you can buy from outside. This is how you have to go for what? Cost of make and cost of buy. Apart from that, we have another one topic called that is indifference level. This also comes in your OPM also. This also comes in your OPM also, indifference level. What is mean by indifference level, my dear friends? One level to another level, which one? Below 10,000, above 10,000, that we have a small formula. Again, formula we have. What is a small formula, my dear friends? We have to go change in fixed cost by change in variable cost per unit. You will get the indifference level. It is below the indifference, which is best now, lower the fixed cost is best. Above the indifference, lower the variable cost is best. Above the indifference, lower the variable cost is best. Are you clear, friends? Next level point is what? They will give you three machines. They will give you what? Three machines. So what you will do? You can't go for this formula which is three machines. This we did in detail in our OPM classes also, but this also comes in your costing also. So how you will solve this kind of question, my dear friend? Step one, you have to select two items. Which one two you will take it? There is a condition. You have to select the two least fixed cost item. Two least fixed cost item. In that you have to identify. The next least fixed cost item. Accordingly, you have to get it. Suppose in first case you are getting 6,000 between A and B. Next you have to go for B and C, this 12,000. Here, what you have to identify is if A is lower the fixed cost, you have to tell that below 6,000, A is best. At 6,000, either A or B. Now, next very interesting. See, when you compare B and C, 6,000 up to 12,000 only B is best, then it is C only. So you have to make it as what? Above 6,000 and up to 12,000 only. Actually, when comparing A and B, the conclusion is what? Above 6,000. But you have another person called what? So this you will get a revision on your OPM also. So what is get your B? Now at 12,000, you will get what? Either B or C. Now above 12,000, you have what? C. The A, B, C and all you have to take it on the basis of fixed cost and variable cost only. In this example, I assumed that A is lower fixed cost, B is again, C is again. In your exam question paper, maybe coin doesn't say A, B, C comes. So A may be higher fixed cost, but you tell, sir, revision class below A, not like that. That is based upon the ranking I have told you. You have to select two items, A and B. You should not take simply in order A, B, C. You have to take two items, two location or two machine where the fixed cost is what? Low. Are you clear, friends? So these are all you have to be able to approach. So what I am requesting is, I hope I have gone through all the formula and all the concept. Now we want to practice standard essay model question. So before we start question, I told we'll do previous year question, MTP and standard or question. So what I request you that now, please revise very fast in your notebook. Once if you revise, I will give you 10 minutes time for you to revise. We'll start doing the problem. Come on, friends. My dear friends, if you discuss one point, I willfully not taken one revision. That is willfully I have not taken. There is a one another concept called a marginal cost versus absorption costing. It is very easy area. The point is what? It is a lengthy. I have given a format. In that format only you have to solve. In that format only you have to solve. This is also in this chapter. That is you have to make it. You have to understand some 2-3 points. The profit will differ. Main reason it will helpful for 2 mark also. Profit will differ. We did a profit reconciliation statement for that. Profit will differ because of the change in closing stock value, and there is change in stock. That is under marginal costing. You consider only variable cost as a part of your cost, whereas in absorption cost you consider both fixed cost and because of the reason your profit change. So the reason of difference in profit is because of what? Changes in the stock value. In the stock value of marginal costing, you consider only variable cost, whereas under absorption costing, you consider both variable cost and fixed cost. Hope you are clear. How the profitability statement? See, profitability statement you have the format. I can tell very fast, but generally for a 7 mark, this is not enough question. This is a lengthy point. It can come as a 12 mark or a 14 mark. So very less chance to come for exam, but however, you should be very clear on format. If you go through the previous 3-4 attempts, these kind of questions are not coming. But if at all for you are lucky or unlucky, if it is comes, you want to take any chance. That is why the format is very clear. First you will come sales, then you have to find reduce the manufacturing cost. When you reduce the manufacturing cost under absorption costing, you will take variable manufacturing cost, fixed manufacturing cost. Correct? That is what your cost of production. Then you add opening stock, you take what? Less closing stock. Here you take both variable cost and fixed cost. The main point is what? Here overhead. Your fixed overhead, you have to take on the base of recovery rate. Your fixed overhead, you have to take on the base of what? Recovery rate. We have discussed the overhead recovery rate formula also. It is also, if a standard 14 mark for your like it comes, your formula is what? What is your factory overhead by your your base of what? Normal capacity. You have to take normal capacity. If it is a machine hour now, maybe 100% capacity, it may be 2 lakh up, but normally you are running what? 90%. Now you should take what? 1 lakh 80. You should not take what? 2 lakh. If question nothing tells about normal, what is your 100%? That is, you can assume it as normal. That is so under absorption or absorption, you have to make it. So it's a format based. That is why I'm not focusing on revision. That format only you have to be taken care. So I hope we have covered all the area. So please go through very fast. Once you revise, we'll start a questions. So now we'll practice questions. See, as I told, we are going with because in our class workbook we have 100 plus questions. So if you start revising, that will take more time. So we covered all the areas. So we are going with a MTP and previous year question. Right now, for your current syllabus, this is your MTP released by the institute. We have two MTP. This is the set to one MTP released by the institute. So we are going to start discussing the sum. So we can able to go for it. You can also take a photo also. So number will be different, not same thing. So we can able to do it very fast. These are all direct question, but direct question we'll do previous year. This is a previous year question. We'll do advanced question also. So we'll do step by step everything very fast. We'll do everything step by step very fast. Are you ready, friends? Shall we start, friends? With your permission, we'll start. A company XYZ Limited manufactures and sell a single product. Here are the details of the current period. Selling price is given, variable cost is given, profit is given, current sales volume 5,000. Calculate the following. What are the details? They are asking us to find out fixed cost, PV ratio, break-even point in units, margin of safety, number of units to get a desired profit. So this is a perfect example for applying the formula. All the formula we can get a revision. So we learn with that example, friends. Hope all of you are ready. So we'll start with the first area. What is the first area? We can go with a fixed cost. We know sales is equal to variable cost plus fixed cost plus profit. You know what is the variable sales. Sales is 50, number of units is what? 5. So 5,000 into 50. What is the total, friends? 250. Correct? Variable cost again 5,000 into 30. Is it 1,50,000? Yes. Next profit. They have given what? 20,000. So very reverse way we can do. Your fixed cost is what? Sales minus variable cost plus profit. You can do same. You can do another formula also. Sales into PV ratio method also you can do. I am doing in one method because PV ratio asking second part. So what is the sales? Sales is 2,50,000 minus 1,50,000 plus 20,000. Can you please tell me what is the fixed cost? Sorry, 80,000 is the fixed cost. Next, they are asking what is the PV ratio. We can do different method. I'm doing in a one method. That is sales is what 50 rupee. Variable cost is what 30 divided by 50 into 100. Can you please tell me what is the PV ratio? 40%. Next, they are asking break-even point in units. We know break-even point in units. The formula is fixed cost by contribution per unit. Contribution is 50 minus 30. You will get what? 20. So your break-even point in units is equal to what? What is the fixed cost, friends? Fixed cost now only we found out 80,000 divided by 20. What you will get? 4,000 units. What is the next level? We'll proceed, friends. Margin of safety. We can do lot of points. They're not specifically mentioned whether it is units or rupees. It is your wish. If you want it rupees, now you go for what? Rupees. Or else it is your wish. Profit by PV ratio. Both the method you can also show. Profit is 20,000. PV ratio is 40%. What you will get? 50,000 is the margin of safety. Next, they are asking desired sales, number of unit. Desired sales in units. Now only we discuss the formula. F plus P by contribution per unit. F is 80,000. P is 40,000. Contribution is what? 20. So you will get an answer called what? 6,000 units. See how easy. Answer is over. Congrats for those who got the correct answer. It's a different question from our class. We did similar question in the class, but not a detailed question. Once you complete it, we'll go for the next question. Now we'll go with a previous year one question. We'll do MTP after previous year, same thing. Little advanced question. This is came for December 23 exam. This came for what? December 23. What they are asking? Little advanced question. Correct? This came for how many marks? This came for 7 marks. So what is this question? Let me read first. You can take a photo if you wanted. You don't have. Okay. Now, it's a very good question. It's a previous year question. Must BLB Industries provide you the following information on 31/3/2023. Sales 40,000 in rupees, material wage, fixed and factory overhead. They mentioned both together. Profit is 4,000. Sales unit is 200 unit. In the next financial year, they expect the following. Wage will increase by what? 50%. Fixed cost will increase by what? 10,000. Number of units sold in the next year will be what? 300. Total fixed and variable order the next year will be what? 12,000. So they given the next year. What is the fixed and variable cost? How many units you have to be sold in the next year so that same amount of profit per unit can be achieved? My dear friends, let me tell you one same point. Very, very important point. PV ratio root and all will not work. We have learned one point called F plus P by PV ratio. That all will not work. The reason is what? We have told today in the revision that PV ratio will change if selling price or variable cost changes. See, wage rate is increasing. So if your wage rate is increasing, that will have impact on what your PV ratio. So that will not work. So how it will work out? For a better benefit, I will do a detailed presentation so that everyone will understand clear. So what I will do now, you have your sales. I will add one column called per unit. I'll add one column called per unit and one column called total. This will give you a better details. This will give you a better details. What is the sales, friends? 40,000. I'll do now total column only. Next is what? Direct material. What is the material, friends? 20,000. What is the labor? 6,000. What is the next item? The overhead. That is both fixed and variable overhead. 10,000. Correct. So you will get the total cost. Then they found out the profit which is what 4,000. Now what we have to do now? Some of the item will prepare a per unit column. Profit right now, how many units you are sold? 200. They tell that next year you want to go with what? Same unit profit. See the point? They said that what is the how many unit you have to be sold next year? What year? Same amount of profit per unit. That means you should get 20. That is the reason I do per unit. Are you clear? Same unit. So this data is for what? 200 units. This data is for what? 200 units. We want to know what will be for what? 300 units. We want to know what is for what? 300. So let me tell you shortcut method. One column for per unit, one column for what? Total. See, first you don't know what is a sales and all. You have to go reverse way. Wage will increase by what? 50%. So for that, we should know what is the current wage. Current wage is what? 100 rupees. It is going to increase by what? 50 percentage. So it will be what? 150. So 150 into 300, it will be what? 45,000. Are you agree? Why I am not doing normal formula? Because PV ratio don't changing. Next we have to go for what? Fixed cost will increase by what? They said fixed cost will increase by 1,000, but they tells that total fixed and variable over the next year will be what? 12,000. That means already the increase they have mentioned it. So no need to make it first. You can take directly 12,000. They given directly what? 12,000. So you don't want to go anything different. Material, are they telling anything? Are they telling anything about material, friends? No. If nothing tells the material cost will remain same. So what is the last year material cost? So one small correction let me make. I have taken this wrong column here. 230 only your amount. 30 into 1.5, 45. Yes. Material last year amount is, if I take, it's 100. See, nothing tells about material. So material will remain same. So you have to put material is 100. 100 into 300 unit. How interesting, friends. Are you able to understand? So they tell you want same amount of profit. What's the same amount of profit? 20. How many units you are selling? You are selling 300 units. So you go to your profit. This is your total cost. What is your total cost? You have to take the same total. Your total cost is 55. So your sales will be total cost plus profit. This is the sales. You have to get the next year selling price is given. No, that same selling price, that you have to go for it. My dear friends, now what I have done is 65,000. This is the sales. This is the sales for 300 units. But the question is asking what number of units to be sold in the next year. So that same amount of profit per unit as 2023. So now for that we will go now formula. Now we will go for formula, that is you want to go number of unit desired sales in units is equal to what? F plus P by contribution per unit. F plus P by what? Contribution per unit. We'll go step by step. First, you should know what is your selling price. What is your selling price, friends? Selling price is what? 200 rupees. Selling price is what? 200. You have to get your variable cost. What role the variable cost? You have material. Material no changes. You have labor. There is no changes. There is a changes. Now the small item variable over it. This is the twist. This you have to get reverse way. This you have to get reverse way. See 12,000 in the next year. We know changing variable cost only. Very, very important. See, very, very important you have to understand. See, last year it is 12,000. Now it is 12,000. Last year it is what? 10,000. Very, very important you have to listen. So the difference is what? 2,000. But they tells that generally difference is variable cost, but they tell that there is an increase of fixed cost of what? 1,000. So total difference, I am just putting difference, 12,000 minus 1,000. Total difference is what? 2,000. In that fixed cost differ by what? 1,000. So variable cost differ will be the balance, which will be 1000. How many units you change in units? Your change in units is what? 100. How you got 100, friends? That is, last year it is 200. This year is what? 300. Tell, my dear friends, from 200, your units is changing into what? 300. Your variable cost changed by 1000. That is, per unit it will be what? Per unit it will be 1000 by 100, which will be what? 10 rupee. 1000 by 100, which will be what? 10 rupee. Our answer is over. You go to your contribution per unit. What is a contribution per unit? From 200, you have to reduce all the cost. Your contribution is what? 45. Now the answer is ready. Your desired sales is equal to next year same amount of profit per unit as in the last year. So we don't know the unit. We don't know the unit. So shall we start, friends? Are you ready? We got everything now. Now we just want to apply the formula. Here they said that you don't know the unit. You don't know the unit. So desired unit, if you kept as X, your fixed cost, you know, what is your fixed cost? Can you tell? Fixed cost we can get reverse way. That is your total variable cost. Variable overhead will be 10 into 300. It is 3000. 10 into 300, it is what? 3000. So your fixed cost will be what? Total is 12,000. If you minus 3000, your fixed will be what? 9,000. Are you agree? Are you agree? So your fixed cost is what? Your fixed cost is what? 9,000 plus profit. Profit very, very interesting. They are not telling same amount of profit. If they say same amount of profit, you can put 4,000. But they are not telling same amount of profit, same amount of per unit profit. So you have to put it as 20x divided by contribution per unit, which is you know already 45. That's all, which is 45. Now reverse calculation. How you have x is you can written as what? 45x is equal to 9,000 plus 20x. If you minus that, 25x is equal to what? 9,000. Your x will be 9,000 by 25, which will becomes what? 360 units. You will get what? 360 units. Are you able to get it? That is how the entire point, my dear friends. So this you don't want to go for it. Don't do this point. This I have just given for what? Analysis. Yes or no? Your answer is what? 360. The formula is here that you can able to do it. My dear friends, now we did for fixed cost increase by. Now I change the question, fixed cost decrease by. Actually, I read it wrongly. We did the answer for fixed cost increase by. So you got a better one more method. The fixed cost increase by, what is the answer? 360. Suppose fixed cost is what? Decreased by. So 10,000 become 12,000. Actually, fixed cost is decreased by 1,000. So 10,000 should be 9,000. 10,000 should be what? 9,000. Now it is 12,000. So change in variable cost is what? 3,000. If change in variable cost is 3,000, change in unit is 100, your variable cost will be what? 30. Instead of 10, your variable cost will be what? 30. So if you want the answer for sorry, fixed cost decrease, if you want the answer for fixed cost decrease, I will do for that also. Difference is 2000. Fixed cost decrease. So variable. Here it is decrease now. It will come positive. So you will have what? 300. Change in unit is 100. So 3000 by 100. You will get what? 30. So if you get 30, your contribution per unit will become what? 25 only. If your contribution is 25, this answer will become what? 25. So here you will get what? Here you will have 25x. So you have to get what? 5x. So x will be 5. You will get what? 9,000 by 5. 1,000 800 unit. If you want the same, because the reason is what? Your cost is changed. That is how the answer will be. Clear or not? So if you want to get the reason in next year is what? That is you can able to get it. The main reason it reaches because your wage increased by what? 50%. There is a significant increase in the wage. Since your wage increases, that is the reason. See, right now in 200, the reason it is what? Wage is doubled. Earlier the wage is what? 30. That is 15 rupees your wage increased. That means you want to get more sales. You want to get what? More sales. Some friends were thinking, sir, what is this point? Here the point selling price is different. If you go here, if I divide by 300, selling price is what? 205. But your selling price is what? 200 only. We are not getting 205. That is why we can't do this. That is why I haven't done not this way. Are you clear? So the just say 10 rupee change, your answer itself is changing. So depends upon the word, your answer also changing. Here you get contribution is only 25. So 25 into x, 25x. Your fixed cost last year profit is same. So here one small fixed cost will it change or not now? Fixed cost is what now? Here, one second, your variable cost. Let me do here small correction. Let me do 30 into what small change I will do 30 into 300. Your amount is 3000. Fixed cost will reduce to what? 3000. Your fixed cost will reduce. Fixed cost also changing. Not only this. So if your fixed cost is changing 3000, so here will come 3000. So here will come 3000. Two area we are changing. So here will come 3000. That is why I also thought that much big unit. So your answer will be what? 3600. Congrats. Are you clear? So that because of that effect, this area we haven't done ready. That is why we got 1800. So now the answer is what? 600. Hope all of you are clear. You can just take your own time and copy.